Today is the first Talk About It Tuesday of 2023, and today's question is, what are your thoughts on the S&P 500 performance in January serving as a barometer for the rest of the year? You absolutely cannot look at 1 month of performance in the S&P 500 as an indicator of how well or how poorly it will do for the rest of the year, because that is merely a snapshot in time. And there are so many things that can affect the S&P 500 performance in the short term and in the long term, that looking at it for 1 month, and we're not even through January, we're not even close to through January, we're in the first couple of days, you cannot look at that as an indicator, because what are some of the factors that will affect the performance in the short term and over the long term? So we can look at economic factors that will give us an indicator of the direction that the S&P 500 is going. Not even real recession, but the threat of recession will impact the S&P 500. The idea of how deep or how easy a recession will be if we go into it will affect the S&P 500. Whether or not we won't go into a recession and we start moving more towards recovery will affect the performance of the S&P 500. And those things are really impacted by the unemployment rate. So even if we're going into an economic slowdown trend of production, if we don't see massive job losses, that will affect the S&P 500. Consumer confidence and consumer spending, if we see changes in that, or even if it stays steady, that will affect the S&P 500. Interest rates, whether we hear the threat of interest rates or we actually have interest rate increases or decreases, that will affect the S&P 500. So you have to stay on top of that. How frequently the interest rate changes and how much it changes will affect the S&P 500. What else? Earnings, right? When we get the earnings reports, the quarterly earnings reports, if they are as expected, it will affect the S&P 500 in a positive way. If it is below expectations, it will affect it in a negative way. So when you hear companies' earnings every quarter, that will affect the S&P 500. Then we have man-made issues, legislation and regulation. That could impact the S&P 500. Social changes and social attitudes towards spending or towards doing certain things or taking advantage of certain services, that can affect the S&P 500. What are the man-made things? Let's see. I mean, there's so many things. Oh, and then we talk about natural. Man-made things. War, right? War is impactful. So whether we have more war or we have peace, that will affect the S&P 500. And that spins off into other things. Whether that causes famine or causes mass migrations to different places, and the impact of migration, immigration, all those things will affect the S&P 500. And then we have natural disasters, right? So we have oil spills or earthquake or climate and weather issues. What else can we have? If we have another wave of COVID or even the flu or some other pandemic scare, that could affect the S&P 500. So you get the gist of it. There are so many things, real or perceived or feared, all these things, or even hope, right? All these things impact the S&P 500. So there's no way you can look at it in January and predict even what it'll be like in February, let alone next December. There's no way that you can do that. You have to stay on top of it. Again, there are some clear indicators of short-term trends. There's some clear indicators of slightly longer trends, but just certain news will impact it on the short term, and just attitudes, beliefs, and behaviors can affect it for a long time. So you have to stay up on economic news, political news, social news, and the trends that are happening in those areas to have an idea of the direction that things are going. You have to pay attention to companies' earnings. You have to pay attention to whether or not companies introduce new products and services that are flops. You have to pay attention to whether people are spending, right? Their spending habits and behaviors, if they change. You have to pay attention to whether people start losing jobs. You have to pay attention to whether interest rates go up or down. All these things are super impactful and will give you a better indicator, and nothing is certain, but it will give you a better indicator of the direction that the S&P 500 is going. And for those who don't know, S&P 500 is an index, meaning Standard & Poor, top 500 companies, in terms of size and performance in the stock market. And so we use the S&P 500 really as an indicator of the health of the entire stock market. Not always fair, because sometimes it's skewed heavily in one sector, like it could be the tech sector. And the tech sector is doing poorly right now because of a lot of factors, and it's dragging down the entire S&P 500, where there are some things in the S&P 500 like energy that are doing extremely well. So it kind of skews the average. So it's even hard to say whether or not you should just be looking at the S&P 500. Really, you have to look at the market as a total, and then you have to break it down by sector, and that'll give you a better idea of where you should start investing your money. So look a little more narrowly at different sectors, because in general, there's usually a couple of sectors that outperform others in different parts of the economic cycle. So being aware of where we are in the economic cycle and what things tend to perform in those times is a good, and again, nothing 100% foolproof, but a better way to strategize as to where you should put your money for a slightly longer term trend. But you have to stay on top of it, because that can shift at any moment. So I love the question. Looking forward to a great 2023. Love to hear your comments. Please like, share, subscribe. Keep the questions coming, and I'll see you next Tuesday.